Brian here. It's Tuesday the 12th. I just posted on Twitter that if I got 500 likes on a post that I would give out some short ideas. It's 4:05. I think it's going to happen. So I'm recording it now and just basically trying to see if people are paying attention. As I mentioned previously, no trade is complete without a stop. No trade plan, that is. And these names look vulnerable here. ALLY, I've been talking about this one as a potential short for a while. If we take a look at this weekly chart in the upper left corner, we've been touching a couple of these volume weighted average price levels, and it looks like once it gives up this level, it's probably headed down under 40. Here's that volume weighted average price on the daily time frame. Over on the 30-minute time frame, we're still above the volume weighted average price from last week's low. So it most likely needs to do something along the lines of, come down like this, make a lower high, and then perhaps short it with a stop like right around that level. So it's not quite set up yet. Shares of Levi Strauss, LEVI, you can see it's below the volume weighted average price from the IPO on the weekly chart. That's that purple line on the. We also have the volume weighted average price from COVID. That's recently been acting as resistance. The year to date VWAP. This is where we were 50 days ago. So the 50-day moving average is declining. On the shorter term time frame, it really kind of just looks like it's making a little bit of a bearish flag in here, or a little triangle, you might say. So in here, I think just another little rally up and then fall apart. So if you do get involved, stop. Worst case to me is right here, about $19.35 per share, MGA, and I'm not going in any particular order here. The weekly chart, you can see we're below the volume weighted average price from COVID. We're below a declining 40-week moving average, below the year-to-date volume weighted average price. The volume weighted average price from these recent lows we'll look at on the 30-minute chart. So from the low that it made this year, we're below that. You can see this is what I sketched out for subscribers last night. So some people are probably short already. If you're short in here, a worst case stop will go right here, perhaps even half of your stop at this level. If you're looking for a new short, you'd want to see a little rally first. It just dropped from 61.50 to 61.6 to 60.60. So I don't like to short these breakdowns. I like to short after a little short-term rally fails. VMware on the weekly chart, you can see here, it's a big top that goes back to, the volume weighted average price from 2016 has been acting as resistance recently. And even from this IPO, you can see perhaps it's headed for a test of that, or the volume weighted average price from 2009. So that would bring it down under 100. On the daily time frame, we're below the 20, the 50-day moving average, etc. We're below the volume weighted average price from this low over here. It's rallied up recently, and that's a good thing. What we need to see happening here is, we've got the danger that here's where we were 5 days ago. We get rid of this tomorrow. That, we need to see kind of something like this occur. So maybe in a couple days, this one can set up for failure. But right now, the momentum is still there on the upside in this stock today. So I don't think you want to short it quite yet, but certainly one to keep an eye on down the road. Zscaler looks like it's probably headed for a test of the volume weighted average price from COVID low. We've got a very clear pattern on the weekly chart, lower highs and lower lows. Anyone trying to buy this, you're buying a stock in a primary downtrend, most likely headed for another test of the COVID volume weighted average price under 200. On this daily time frame, you can see we're, that 20-day moving average is sticking just above it. We're below the volume. We're just at the volume weighted average price from this recent low. It got a little bit extended here today, 236 down to 226. So I wouldn't short it here, but if it came down further and then got stuck under the 5-day moving average, I'd want to short it something like this. Worst case stops somewhere up in here. Stops on every single trade, no matter what you think of the fundamentals, the economy, whatever it is that you look at. Otis Elevator, the volume weighted average price from the IPO would bring it down towards about $69 per share. We're below the volume weighted average price from the year to date low, as well as the low we saw 2 weeks ago. And same story here in that we don't want to short it. It's just dropped from 77 and a quarter to 75 and a quarter. If it can rally up in here the next day or two and get stuck below that 5-day moving average, then short it on the way down with a stop above whatever ends up being the most recent relevant lower high, then Otis becomes a candidate. So it's not quite there yet. SGMS, you can see the volume weighted average price from COVID over here on the left. And I don't know why I have that one there, but here from this gap, looks like another test of that could be coming. That's at about $52 per share. It's really been kind of stuck in a range on the daily time frame, a big range, but now we see this support in here becoming resistance. One thing you look at this stock, and I look at the personality of the stock, and the personality is schizo. I mean, it's all over the place. So if I were to trade this stock, I think that I'd first want to see it do this and then come down along this line, maybe a stop just above this level. But I would trade it definitely with smaller share size because of the personality of the stock. XPEV, I am short this one currently. Here's the volume weighted average price from the IPO. The year to date volume weighted average price is declining. The stock on the 30-minute time frame, you can see it's below the year to date low, and it's just breaking below the volume weighted average price from this gap lower 3 days ago. So I'm short right in here. My stop was originally going to be here. Now it's at this point. I'm not here to lose money. I'm here to cover a third pretty soon, and then to keep my stop probably above this level, hoping that maybe it can drop down towards 20 bucks per share. But I'm going to manage risk on the way down by lowering my stops just above whatever the most recent relevant lower highs are. So if we keep grabbing the wrong tool there, if we come down along the lines of this, at this point I will lower it to here. At this point I will lower the stop to that level, and then etc. So I might get stopped out right there. I don't know. It's up to the market to tell me when to get out. AutoNation on the weekly chart just looks terrible. The volume weighted average price off of the COVID low is down near about 83. On the daily time frame, you can see we just rallied up to the conjunction of the 20-day moving average, the 50-day moving average, and the year-to-date volume weighted average price. In the last 2 days, it's found sellers in there. Absolute worst case stop would go above there. Now we have kind of the same little story in that it's just dropped, from 107 to 102. I'm not going to short it after a 4.5% decline after a couple hours. So, if it rallies up here like this the next couple days, that range tightens, and then that 5-day moving average heads lower, short here with a stop above one of these lower highs, whatever that level might end up being. One more would be Hain. This is the underwear company, I think. No, it's actually Hain Celestial, the tea company. Anyways, Hanes is looking bearish to me. It's stuck below these volume weighted average price levels from this low, and from the year to date is that pink one. It's below the declining 50-day moving average and the year to date volume weighted average price as mentioned. I'm not short this one yet because we've got an advancing 20-day moving average. This is where we were about 20 days ago, so that'll change soon. But here you can see in the 30-minute time frame, and just when we look at this 30-minute time frame on the left, what we're looking at on the right is basically just this. So you can see that I just circled that. So that's what we're looking at there, and that's why we use multiple time frames. So maybe a little rally up, just kind of distribute for a day or two, decline, and then stop above whatever lower high is most recent and relevant to your particular time frame. Risk management is always job number one. Have your stops first and foremost, especially on the short side.